Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm excited to join you on this Tuesday, August 24th. I've got some interesting charts for you today to think about. I'm going to look at the month ahead in September and give you a few industry groups that historically, during this secular bull market, have actually done pretty well during the month of September, even though it's been the worst performer in the S&P 500. And I'm going to get to all of that in just a minute. I do want to take you over to earningsbeats.com. I'd love to have you join us over at Earnings Beats. If you go to earningsbeats.com and you scroll down, a couple of things. First, we have a free newsletter. You can see right here, just simply type in your name, email address, and hit that subscribe button. You'll join our community. This is a completely free newsletter. There's no credit card required. Or you can unsubscribe at any time. It's published 3 times a week, Mondays, Wednesdays, Fridays. Typically, I write about companies that have reported earnings that look good from an earnings perspective, maybe from a relative strength standpoint. Some of the things that we value at Earnings Beats. I think you'll find it very educational and provide some solid trading candidates from time to time. So that's certainly one thing you can take a look at. If you'd like to try our paid service, right at the very top, you have a no-cost trial option. So literally 30 days, no cost. We'll get in touch with you before your 30-day trial expires, give you ample time to decide whether or not you like our service, if you want to continue, or whether you'd like to cancel, completely up to you. But I'd love to have you try our service. One of the features of our service is our portfolios. And we have 10 equal weighted stocks in 4 different portfolios. And if you click on this historical performance area right here, you can see it'll take you back to the 4 portfolios. You can see our since inception performance in each of our portfolios versus what the S&P 500 has done since the inception of each of these portfolios. So you can see our performance has been very strong. Also, we have an ETF portfolio. You can check out the performance there, including this quarter and also since inception. Anyhow, we'd love to have you. All right, so what have we got for you today? Well, I looked ahead to September, and the first thing I wanted to show you is before we even, this is semiconductors. This is going to be the first group we look at. But before we get into the semiconductors, I just want to pull up seasonality. I want you to take a look at the S&P 500 since this secular bull market began. Now, I define the secular bull market beginning as the date in which we took out the prior tops on the S&P 500 from year 2000 and 2007. That occurred in 2013. So if we go back and just stretch this little bar here back 9 years, you can see up here, it talks, this is basically a summary of the S&P 500 from 2013 through 2021. 2013, that's when we broke out. Now, if you look at this, you'll see that the S&P 500 only has gone down on average in 1 month, and that's September. September, if you're having problems, let me just make this a little bigger. We'll go back down here. So here's September, minus 0.1%. March flat, December flat. September minus 0.1, June is actually up, but those are the 3rd calendar month in each of the 4 quarters. So just kind of keep that in mind. The third calendar month of each quarter, the market does tend to struggle. And this has been during an 8-9 year secular bull market that began again in 2013. And yet these months, March, September, and December, have done nothing. June's the only one that's actually performed well. The only one of the 4 calendar quarters, the 3rd month of the calendar quarters. So anyway, I just wanted to point that out. So just understand, September is the only month of the 12 that actually has an average negative return, even during this secular bull market. So as we look forward and look at some of the other areas or, different areas that could help the stock market in September, I thought, well, why not look at the past? So let's start off first with semiconductors. So semiconductors, if you look back here over the last, I'm going to use the same time period, 9 years, which is 2013 to 21. I just want to see how semiconductors have done. Now, what I've also done is I've added the S&P 500 here so that we're comparing. So when it talks about the percentage of months that the industry group goes higher, it's the percentage of months that it's gone higher relative to the S&P 500. So if the S&P 500 goes down 1% and the semiconductors go down 0.5%, that counts as a positive month that actually outperformed. So even though it went down, it outperformed. Anyway, just wanted to point that out. And then down here at the bottom, this is the average amount of outperformance, not the average amount of actual or absolute performance, but the average amount of relative performance. If you look at semiconductors, you wouldn't think that September is their best month or one of their best months, but actually on a relative basis, only May has been stronger than September. And over the last 9 years, look at what September's done. 88% of the time, 88 out of 9 years, we have gone higher than the S&P 500. The semiconductors have outperformed. So this is one group, obviously, I think that would be worthwhile taking a look at to see if technically it's performing well heading into September, which is only a week away, believe it or not. Then this is a group that certainly we should be at least considering. The next group I wanted to take a look at from a seasonal perspective is apparel retail. Now, once again, I'm going to pull this up relative to the S&P 500, drag it back to 9 years. And this one really got my attention because if you look from January through July, every month except for February, every month, apparel retail has underperformed the S&P 500 on average, except for February in those first 7 months. But once we get into August, look at the relative strength start to build in. Look at the percentage of months that the apparel retailers outperform. The second or third best month of the year for apparel retail is September. November's 1st, February's 2nd, September's 3rd in terms of relative strength versus the S&P 500 or relative performance versus the S&P 500. So apparel retailers certainly are an area that we want to keep an eye on. How about railroads? So railroads, if we go back this 9 years, look at this. Every year during the secular bull market, railroads have outperformed the S&P 500 in the month of September, every single month. And if you look, there's only one other month, November, that even comes close to the outperformance level. I mean, then it drops off all the way back to April's 1.7% outperformance, average outperformance. So September clearly stands out for railroads. Next up, footwear. Now, I can tell you, Nike loves the month of September. Back to school, you know, think back to school theme there. But September average outperformance of footwear during the secular bull market, 5.9%. June, 4.7%. And that's it. Nothing else even close to this. So footwear clearly has some seasonal tailwinds as we go into September. So keep that one in mind. The last one I wanted to talk to you about are the airlines. Now, airlines, when we go back over these last, the last 9 years, so 2013 to 2021, I want you to look at September, October, November. I mean, this one really stands out to me. December negative, January flat, February good month, March big loss on a relative basis, April horrendous, May nasty, June not good, July bad, August negative. And then all of a sudden, September, October, November, we have these 3 months that are absolutely on fire relative to the S&P 500. So as we head into the month of September, I think these are 5 industry groups that you really want to keep an eye on: semiconductors, apparel retail, railroads, footwear, and airlines. All right. It was a pleasure joining you today on your Daily 5. Please remember to go over to earningsbeats.com. We'd love to have you sign up for our free EB Digest newsletter, or feel free to try our paid service. It's free. You get 30 days. We'd love to have you try us. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.